we had, and we said to you guys, the dealers are going to have a real bad job if they take the market bid above that big handle, because they're so, at that stage, they were so short that it would have been a real kick in the chops if they got taken out, right? So there was a very good chance. Why do you build a position of that size? Why does anybody build a position of that size? They don't need to build a position of that size, Johnny. They don't need to. So why did they? Well, because they must have had a strong feeling that they had this trade right. A strong feeling that 6,000 wasn't going to go bid. And as it turns out, in hindsight, they were absolutely spot on. And the deal book got it correct. The deal book was exactly on the money on that, as well as the smart money, as well as the credit spreads, as well as the price of volatilities. Everything was right on that number. And because we were at the top edge, we weren't buying anyway, because we told you earlier on in conversation that if this number came out and we were at bottom edge equities, we would be interested in taking a buy into the number. So on this occasion, sell side top edge, we got several times, made a lot of money on it. The only downside for me was I wasn't able to buy for the flip reversal. It was a good price level. The 59.75, of course, is a dealer's key level. And, you know, it's one of their top four. It's one of the four magical dealer's keys. 59.75, 6,000 are the two magical dealer's keys, and that's what we're trading between just now. You'll see oil numbers, guys. 3 minutes. I did take an oil short at 63.80. We managed to squeeze a profit of 25 ticks out of the trade, and I did scratch at +1 in the remainder. We very quickly lost the swap dealers who went very strongly buy side. And, you know, obviously when you saw the dealers going buy side, then the chances of me staying in the trade were zero. And that's kind of what happened to that outcome. You can see it for yourself. This was my sell trade here. Pretty crap, I know. But at the time, it didn't look as if it was going to be crap. At the time, we had sell side divergence on the swaps. So you can see that there was some sell side divergence on the swaps into that higher price, which is a level we know very well indeed. And we made some money into level 2 liquidity. You might say, why did you take it out at level 2 into that technical right there? Well, because when we came into that area, the swaps had gone very strongly buy side. So I'm not going to not take it out, am I? So, you know, with that takeout, the dealers pulled, the price went up very, very quickly. And we ended up scratching at +1 on the remainder. And from that point onwards, it's been nothing for me. You know, it's a buy side market. We're obviously looking at that as a very high price, of course. So with swap dealers very, very long, you would imagine buying on dips back into this technical might well be on the cards. And if they buy into the dip here at the technical, a little break of that liquidity, all the stops for that technical are going to be based around that 63.50. So this is going to be your spike buy price in that area there, isn't it? If we get the right number. So in other words, if we get a boo-boo, or sorry, a BBU, that would probably be the best outcome if we got a BBU number, a build on the headline and a draw on the gasoline. That would possibly pop the price down to 63.50 for a buy sweep into VWAP, and then a long trade away from that. Would that make sense to everybody? Sure.